those lights are bright. So today we're going to explore the concept of the right regulatory balance. So what is that? How do we achieve it? And how do we learn from the past so that we can better meet the challenges of the future? And we've talked about a lot of them over the last couple of days. So privacy, the regulation of AI in financial services, payments. So let's turn to financial stability, prudential regulation. I think there's been broad consensus over the last couple of days that generally we've got the settings, we've got the regulatory balance pretty right. We've sort of heard from the Treasurer, Jim Chalmers, saying that APRA has world-class supervisory frameworks. There's been a sense of comfort, hopefully not complacency, that the SVB collapse couldn't happen here. But let's turn now to conduct regulation. And I think striking the right regulatory balance in relation to conduct regulation, well, that's tricky. You want to prevent market failures on the one hand, but you also don't want to remove completely the risk of all consumer losses, and you don't want to ensure that in all circumstances there will be full compensation where there are losses. But you also want to balance that with having an innovative, a competitive and a productive financial system. So that's a bit of a complex balancing act, and it requires very careful consideration by the regulators. So I've worked at ASIC. I really appreciate that they make very difficult and finely balanced regulatory judgments every day. And it's often without perfect information, usually. And it's certainly without a crystal ball that can sort of identify the unforeseen and foreseen consequences of a regulatory change. And of course, we've got to recognise that it's happening against the backdrop of lots of competing and conflicting views from industry, from other regulators, from consumers, from government. So we also need to think about, and Clive's going to talk to you a little more about this, how do you consider all of your regulated population? How do you make sure that you get the settings right for the very big institutions like CBA and the slightly smaller institutions like Suncorp? So I think we can all agree that consumers have, I guess, the right to expect that they'll be afforded the same basic protections regardless of the institution that they do business with. But getting that regulatory balance right when you're implementing regulatory change at some of the slightly smaller institutions, well, that can be a bit of a challenge. And I'd be really interested in your views on that, Clive.
Sure, jump in. Thanks, Alina. It's good to be here. So I'd start from the same place you started, Alina, which is overall, we've got a pretty solid, sound, strong regulatory framework. And I think especially in prudential space, keeping the system stable, unlike what's happened elsewhere, huge tick. So please don't walk past that. In the conduct space, as you mentioned, I'd just make 2 points. The first is we've got a very one-size-fits-all regulatory approach here. And so if you think of many of the big regulatory changes that have happened, let's just take one of them, open banking as an example, which strategically is a good thing, and it's a good thing for a smaller bank like Suncorp Bank. The bank that Angus represents, CBA, is roughly 10 times bigger than Suncorp Bank is like for like. However, the cost of delivering change to adopt, embrace, utilize open banking is not 10 times less for us than it is for a big bank. And so finding ways in the regulatory framework to be scale appropriate, I believe, is very important, because otherwise we smother those smaller organizations.
So we might turn to thinking about the right regulatory balance through the prism of some of the challenges that we've been talking about over the last couple of days. And I'd like to turn to payments and digital wallets first. So yesterday, Dr. Chalmers released the payments strategy. There's lots of challenging timeframes, as Anna Bly rightly pointed out, but there's much detail to be filled in here over a number of years, and consultation is really going to be key. And I really liked the discussion about the 3 C's of consultation. So we've got clarity, we've got common ground, and where we can't find common ground, compromise. So I guess, Angus, what would you like to see from this consultation process? What are your priorities for payments, and how do we balance safety with things like innovation, competition, productivity?
Good, thank you. Good to be with you, Alina, and good to be with Clive as well. Clive was at CBA, so he probably still recollects some insights into how much it costs us to do things, but acknowledge your point that it's definitely not a 10-to-1 benefit, and a thank you to you and the team for putting on a great event. It's good to be here. Look, payments it's a rich topic. I'm sure we could do an hour just on that one alone. Firstly, really positive announcements yesterday. Certainly from my perspective, 11 years on the retail bank leadership team, probably some of the most positive developments in payments I've seen in a long time. I think it's extremely positive that we're bringing the tech wallet providers into the ecosystem of service provision, the decision to phase out checks by 2030. I think it speaks, Clive, to the point you're making as well of we need to simplify as we invest to make sure that we keep the system modern. I think, look, also in the payment space, we're very acutely aware, as I'm sure everyone in this room is, this vector around scams and frauds is a really tricky and pernicious issue. It affects way too many Australians. We're doing a lot to try and combat that, as I know every institution is. One of the things, obviously, is we move from, let's call it something that was a bit more of a card-centric model to the more of a real-time model. That definitely creates great wins for us in terms of moving the money around more quickly. It also creates some challenges. I don't think we foresaw them 3 or 4 years ago when the magnitude of scam activity was substantially less than it is today. But obviously those new payment mechanisms, they need to have safety front of mind, as I think is now a pretty clearly accepted sort of hierarchy of what's the primacy of the agenda in the payment space. People have got to be able to send money confidently. We've got to help make sure it gets to the right location. And I think as the PSR in the UK said, we need to make sure that there are incentives for all the participants to invest and innovate in the payments landscape. And I think that's one of the issues we're going to need to lean into in due course is how do we set up a relevant model for the future, one that enhances the safety of the system but also creates the right incentives for organisations to invest. As Clive mentioned, the investments in NPP and open banking, I think yesterday it was $3 billion was the number roughly put on the table. That's a lot of money. That's a lot of customer, shareholder money, whichever way you want to cut it. We need to make sure we're getting really good investment returns out of that.
I'll just add to that. I feel really welcome to see policy settings that are going to take things off the table, because typically regulation adds. And payments is a great example because we just added another whole payment stream, a fantastic one in NPP. And so I think it's really welcome that we will be taking some payment streams out of the system, checks, direct entry, amongst others. And also just expanding on Angus's point, I think we have shared economic models are pretty much similar whether you're a big or a small bank, but the pool of revenue, things like interchange, that is there to help fund scam protection, fraud, innovation, new services for customers, that pool is being driven down. And payments is quite uneconomic in many ways for banks to deliver. Again, scale matters, but I think that's quite an important policy setting is, you've got to be able to finance this innovation from somewhere. And when interchange is going pretty close to zero on debit and squeezed pretty hard on credit in the traditional card space, that's making it that much harder to keep innovating and changing.
So it sounds like there's going to be lots of consultation in relation to this really important change. We might now turn to AML, CTF, so anti-money laundering, counter-terrorism financing, and the regulatory regime around that. So we heard some fairly, shocking statistics yesterday about the cost of AML, CTF compliance. And for the benefit of those who weren't here yesterday, more is spent on AML, CTF compliance than in the UK, the government spends on prisons. In the US, it's more than the budget of the FBI. And the return on this investment is also is shockingly low. So only 1 to 2% of malicious transactions are identified. So I think when we turn to AML-CTF and the regulatory regime there, I think we can all agree that the objective is a sound one. But perhaps the way that we achieve these objectives, maybe that needs to be considered. And indeed, the Attorney General has released a consultation paper adopting some of the principles from FATF, and that consultation is still open. Clive and Angus, I'm really interested to hear your thoughts about how we achieve those objectives, but do it in an efficient way.
Yeah, I'm happy to start. Maybe, given CBA's experience in this area, it's something that I know every organisation takes it seriously. We do, and I think if you look at the journey that the whole country is on, probably candidly globally, this is an area where regulations really come to the fore in the last decade or so, maybe a little bit longer than that. It's a massive issue for us to tackle. And I get the statistics on perhaps there is to some extent a relatively low yield. I see a system-wide benefit of what we're trying to put in place at the country level. To your point, very supportive at CBA on the Tranche 2 reforms that we're putting forward with the Attorney General for consideration. We think, obviously it's got to be a systems approach. It's the same with scams and fraud. It doesn't help to lift up one area, but to leave others at a lower watermark, so we're very supportive of that. And it's interesting, even in those Tranche 2 reforms, maybe a little bit to the topic of the day, there's a tension there between the outcomes we want to deliver from a fin crime perspective and privacy of individuals. Now look, my view, and I know it's sort of it's the debate within the gatekeeper community on how much are they in a position where they need to respect legal privilege and the privacy of individuals that they might be dealing with, a lawyer, a real estate agency, other gatekeepers. I do think there needs to be a bias, which is we need to make sure that there's a efficient path for people who are in Australia where their identity is already established, and for those who are coming to Australia for the first time and looking to participate in our financial system, there probably should be a higher bar. Now we need to make sure the burden on those gatekeepers is proportionate, but I think that's an essential part of us getting where we need to as a whole community. We need to uplift at a sort of a system-wide level that fin crime aspiration and also the outcomes that we're getting.
Yep, and the ads I would have there is, I don't think anybody, I certainly would never stand up and say, it's a poor investment to try and catch financial criminals. It's not, it's a good investment. Having said that, there's a lot of inefficiency in the system, which we probably all have experienced in our personal lives. How many times have we had to provide our own personal identification moving from one participant in the economy to another? How often do we have to refresh that? So I think the opportunities to be much more efficient and organised and coordinated across not just banks but other industries with national IDs and the like, there's a huge opportunity. Everybody's a winner if we can do that. The other point I would make is Tranche 2 reform's fine, but I feel like there's another big category that would all benefit if there was closer regulation, which is the crypto world, where we see, just looking at our own data, I won't speak for anybody else, but a lot of the fraudulent payments that leave our banking system go into that world. And so many of those platforms are really good and they've got a lot of controls and reporting and tracking. But the fact is, it's a destination of choice for criminals. And so finding ways to make it that much tougher for money to move out of the formal banking system into the crypto world and try and retrieve that money for customers when things have gone wrong, that I believe is also a big priority.
And, sorry.
I was just going to add, now that the clock's well and truly, I think we're almost at 2 o'clock, so we're close enough. In the vein of that, we've got some announcements that will come out later today where CBA will adopt a posture on limiting the velocity of crypto transfers out of CBA. It's one of the major vectors that we see customers being scammed through. It's a position that we've given a lot of consideration to because we know there's a small number of individuals who are heavily engaged in that segment, but something that looks like basically a 10K a month limit on outbound flows to crypto exchanges, as best as we can identify them, will be announced later. Well, it's probably announced right now for anyone who's got the CBA newsroom. I'm guessing that's not many people, or hoping in some way, who've got an alert on for that, but you'll see it later today in the news media for sure.
And so perhaps the question not on notice, just around crypto regulation, that is one of the key challenges as we sort of enter into the next couple of years, is sort of that clarity on how we regulate those sort of new technologies and new financial services and products. Did you have any sort of words of wisdom as Australia embarks on that sort of process?
Well, I think, we're going down a path of tranche 2, which is driven through the FATF approach, and that makes complete sense. But I don't think the same maturity of thinking has been applied to how we tackle that sector of the economy, which is a very legitimate sector, and it's a growing sector, we all know that. So the focus to date has been sort of onboarding, offboarding, making sure that there are controls and checks at that point where money moves in and out of systems. But in the same way as there's a lot of monitoring expectations for banks, there's risk rating of customers' expectations, there's the ongoing due diligence that we're all required to do. I think those principles are sound, and we'd all benefit if they was applied a bit more holistically.
So we might turn to financial advice, and I might ask Adam Spencer. I can see that there's 14 minutes left on the clock, but Angus tells me that we're approaching 2 o'clock, so...
No, I'm wrong, yeah.
Right. Okay, excellent. So we might turn to financial advice with confidence that we've got time to answer all the big questions. So I guess the objectives of financial advice regulation over the past decade or so, they've been sort of directed towards addressing some of the structural conflicts in conflicts of interest, advisor competence, etc. But what has resulted is quite a significant advice gap. We've got people who need advice, who are not getting access to advice. We've got an ageing population. So as people sort of enter into the retirement phase, that's a particularly important time for financial advice. We heard from Michelle Levy yesterday about the quality of advice review and some of her recommendations there. It seems pretty clear to me that AI is going to be a really important part of addressing the advice gap. So I guess I'm interested in your thoughts about financial advice regulation generally, about the role of AI in financial advice, and any thoughts you've got around how we tackle that really big question of how we regulate AI in financial products and services. Who'd like to tackle that first?
Amazing. I'm happy to start, and then we can go back and forth on it because it is a big topic.
Yeah.
And in some ways, the word advice is both helpful and unhelpful in talking about the space. I sort of start from the premise of, I think if you take what's the higher level role of a bank, whether it's Clive's or mine, we want to help people do better with their money. It's words to that effect. And I think the service we offer on the whole is still too transactional in nature. I think there are a lot of Australians, we see that, whether it's in service of people who are going through a terrible period connected to domestic violence, whether it's people who are going through a separation, whatever form of vulnerability people are facing. But candidly, everyday Australians who are struggling with cost of living challenges, their mortgage going up, they want to know what to do and how to navigate all the financial products out there to get a better outcome for them. I think versus that highest bar, as an industry, we're falling well short of it. And technology will provide, inevitably, some solutions that can help do that. Some of you may have seen the video that was connected to the announcement we made, it feels like 2 weeks ago, on reimagined banking, which was an example of our first attempt at something that looks like a co-pilot for our frontline teams. There's 4,500 procedural documents for a frontline team member at CBA to get across. It's obviously really difficult, and we put a lot of systems in place to try and support them to do that. I think one of the really powerful things that came out of that little experiment and the time that we were able to spend on the West Coast with Microsoft and others, there's a breakthrough opportunity there to make our frontline teams or our customers directly, I think, in due course, much more capable of having a really high quality conversation with our customers. We know that anytime you have humans involved, you're always going to get some level of variability. And when you operate in the regulatory environment that we do, that means that you're probably going to, sort of constrain the conversation down to the pieces that are safe, that you can reliably deliver. And I think we miss a big opportunity in the space between that and where we could be. I think the reforms, look, obviously reforms in this space are complex. I understand the concerns of people who would look at the past and say the banking sector really had a pretty average run on advice historically, and there were a lot of customers who were let down by the experience that we offered. Acknowledging that, I still think the need for us to serve the community is so large and has the opportunity to really support Australia to become as much as it might sound corny, I think one of the great things that we can do as banks is help our community to become more capable with their money. That's a great thing for Australia. We're such a fortunate country in so many ways. You can't help but look around the world at the moment and feel like we've landed in a pretty good place here. We've got a really good civil discourse on the whole. So look, from my perspective, it's a very exciting opportunity. Technology is going to come at it. I'll pass to Clive and then we can come back for more comments.
Sure, Angus loves a good chat about AI and data. Just connecting to the point about getting the balance right and starting out with financial advice where it was coming off a pretty bad base, so no walking past that either. And so a whole lot of reforms were put in place. The net result of that is not good for customers because, as you say, it's, traditional advice is inaccessible. And even with technology making that easier, it's still a long, hard, expensive path to hoe. The example I would use as well, it's maybe not formal financial planning advice, but it is loosely advice that a bank may provide to a customer. Just think of a customer who walks into a branch and says, or a mortgage broker for that matter, hey, I've got my home loan. Oh, by the way, a condition of the loan as we impose it on that loan is they need to be insured. You've got to insure the property that is part of the security for the loan. A banker is not allowed to say to that customer under the anti-hawking legislation, oh, and would you like a quote for home insurance or home and contents insurance? Not allowed to do that. Anti-hawking says that's an unsolicited conversation, therefore it's not permitted. Which, if you just stand back, you say, well, that's not a very common sense outcome. You've got a person having a conversation. They might have known each other for 10 years. And you're only allowed to talk about the thing that they asked you about. And our people, trying to do the right thing by their customers, would be breaking the regulations if they were to say, oh, and would you like a quote for insurance? It's only if the customer asks them, oh, and can you help me? So, you get these scenarios here which started out with a well-intentioned policy. I think anti-hawking was designed to stop vulnerable customers being called around low value, let's just say funeral policies or life policies or whatever the case might be. But the unintended consequence is customers can't have a sensible conversation with us anymore. And I think that's a really simple but good example of where small A advice has been killed with a goal to prevent some really egregious types of behaviours at the fringe.
So if only we had that crystal ball to see those unforeseen consequences. Where I'd like to go to next is to the future. And we're facing a lot of regulatory challenges over the next 10 years, and we've sort of heard about a lot of them over the last couple of days. So I guess we've got lots of regulatory reform coming. How do we coordinate? How do we share a common vision of where we want to head to as a country in relation to financial services regulation? It feels to me, John Lonsdale said yesterday, that it feels like an eon since the financial system inquiry in 2014. It feels like we need another one to work out where to from here, given the nature of the complex sort of issues that we're going to be dealing with. So I'd be interested in your views on that.
Sure, I'm happy to start. I think the key word is coordination for me, because most regulatory changes in isolation make a lot of sense. But, and with respect, I would say that they are not always coordinated across the regulatory bodies. And so that's something that the ABA has been working on is, can we try and create a roadmap, a forward view, which is done in other markets in the UK, for example, where all the regulators say, okay, well, here are our agreed priorities across the system. And that's super important, especially for smaller banks like us and ones that are even smaller than us. because it's the same people typically who've got to deliver these changes. Our frontline teams, our digital teams, they're all trying to deliver a lot of stuff, which tends to be quite unsequenced and uncoordinated. So I think that would be a really positive step, and a little bit of what we heard from the Treasury yesterday is a step in the right direction, I believe, just giving a longer-term roadmap. But through Council of Financial Regulators and other groups like that, there is an opportunity to be a bit coordinated and give some clarity. Of course, things change. We've got to be agile, got to change, but to give something of a roadmap that people can plan around for the next 3-4 years.
Yeah, completely. Well, I think it's a very well-made point. And I'd add, I think, I'm sure all of us, with the time that we spend in the industry and around it, you see a lot of the topics that feel like they're relatively well understood, where there are clear steps that we can take that take us in the right direction. So from my perspective, I think it's probably a little bit about maybe trying to find a little bit of a faster cycle of iteration on some of the areas where we know we need to make more progress. We can see the scams and fraud issue coming at us, right? That will require more involvement from what do we want to call it, a set of standards, an approach that's bigger than the banks, that brings in the telcos, the social media players as well. We can see areas where we know we need to connect the dots. And I think we need to find a way to sort of cycle through some of those changes a little bit more rapidly, bringing the group together. I know many of us are involved in trying to convene different forums to bring the right people together, including the ABA, and I think that makes a big difference if we can align and take steps in tandem together. I think that's really positive.
Yeah, I might just add as well, I'm sure it's been covered at some length in the last day or so, but a coordinated Team Australia approach to scams is a perfect example, and I'm super encouraged by what the government's doing with the Assistant Treasurer, Mr. Jones, in saying we need to bring all of these parties together. How can it be that a digital platform, social media platform, is advertising and making money out of people advertising investment scams, as an example, on their platform? How can that be? And they're kind of off on their own. And so bringing together the banks, the telcos, the social media platforms, etc., into a coordinated approach, that's the only way we're going to win the fight against scams. And I think collectively there's enormous power between those organisations and those industries if they do put their collective resources together.
I think we heard yesterday that the role of COFA, which I think is a really important institution, there's going to be some more rigour and formalisation around their processes, which I think will help with that Team Australia approach. I'm conscious that we're sort of near to close, so I thought that I'd sort of end the session with an invitation to both of you to give your views in light of, the topic, striking the right regulatory balance. Are there any areas of reform that you're particularly keen to see tackled, that you're particularly concerned about, or any sort of advice for those in the audience about the sorts of things that they should be thinking about when they're implementing regulatory change?
I'm happy to start. Yeah. Well, look, and maybe to echo where you both started as well, and I think we've got a lot right in Australia. When you look across the globe, whether it's from a prudential perspective or the great work that's been done over many years that's been focused on customer care and support of vulnerable communities of many different types, I think there's a lot good that's happened. The responsible lending reforms, you look back and think, well, that looked like a pretty powerful set of reforms, especially given what we're leaning into now and the different volatility we see as we go through different economic cycle. There's a lot that I think we can be proud of. And we've covered many of the important topics today. Maybe to add one to the list, I'm a big fan of what the government and the whole sort of space around open banking. I'm less of a fan of password sharing and screen scraping. I think one of the really positive things that hopefully will come out of the open banking regime is a sunsetting of the current practice of screen scraping and password sharing. I just, a bit to the sort of this, it's a jarring juxtaposition that an environment where we've got so many customers who are being targeted by unscrupulous individuals to share credentials or 6-digit, netcode pins. I'm sure you've got an equivalent, Clive. The idea that we've got a way of sharing data that we still allow, which involves sharing a username and password to a third party, where the quality of that third party could be highly unknown. I think that's a very dangerous practice and something that we need to make progress on reforming.
Yeah, and I would agree with that, Angus. Thank you. I guess I would stand back and say, if you think of the pathway of regulatory reform in the last 10 years, you know, we had the Royal Commission, various inquiries, a lot of really significant reforms came off the back of that, and I think that's all been to the good. Customers have benefited significantly. My biggest point would be the world keeps changing and we just can't keep on the same pathway, and more of the same is not going to solve the problems, and we need to be able to pivot the direction of regulatory reform as we go along, and scams is a brilliant example. We need to stop some things and start or redouble our efforts in other directions. So I guess it's a bit conceptual, but carrying on in the same way as we have is not going to win the battles that we need to win in the long term. And so a more adaptive regulatory framework that's coordinated across regulators, I think will serve the economy well for the next decade.
I said at the beginning that regulators had a very tricky job getting the balance right. I think that's just been confirmed today. But I really like Clive's point at the end that I think there does need to be that step change in how we approach regulation going forward so that we can have a coordinated approach, so that we can have a considered approach, and perhaps an approach that not everyone is happy with necessarily, but that we can live with and also sort of engenders that trust and confidence in the financial system, which is just so important. Thank you.
Excellent.
Thanks.